Morning, traders and investors. Thank you for tuning in to Pre-Market Prep. Today is Tuesday, January 28th, 2025. On a turnaround Tuesday, question mark in there. Guys are going to talk about the implications from the price action lower yesterday following the DeepSeek. I'm going to call it hype. We're going to learn a little bit more today about it. And we got a couple of good educational moments here from the guys overnight, dealing with this stuff and kind of bringing to the surface some good education for you. We also have a data point at 8:30 a.m. today, durable goods orders, but all eyes are going to be on the Fed tomorrow. We do have a Fed meeting tomorrow at 2 p.m. with that accompanying press conference at 2:30 p.m. A couple of earnings plays from overnight. GM is going to be the big one that we're going to be looking at. Little headline out of TikTok, Trump saying that Microsoft could be eyeing a bid for TikTok to save the app in the United States. We also got a couple analyst calls we're going to look at today, including a downgrade on AMD. At 8:30 a.m. today, Helene Meisler, she's an author at The Street Pro. We'll be getting on with her and seeing her thoughts about the market and on this turnaround Tuesday, any hype pulling over from the DeepSeek yesterday. We're going to get Joel on here in just a sec with a quick look at the markets. But first, folks, let's run that intro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right. Good morning, traders and investors. We are starting out in the green. Up 13 handles at 60.59.75. Way above that intraday low and way above that low from yesterday. The buck, that's coming back up 64 cents, trying to get back to that 110 area. TLT giving a little back, but had a great day yesterday, down 39 cents, 87.86. USO, trying to break a 3-day losing streak here, up 55 cents at 78.48. GLD getting hit yesterday, mild rebound in that. Silver ETF slightly in the red. Bitcoin recovering with the NASDAQ. Bitcoin futures up $1,180 at $102,675. Let's bring Triple D onto the stage and Christian. Gentlemen, did you survive yesterday?
Survived, yes. Good morning. Christian, we'll throw it to you here first. What happened? What happened yesterday? Talk to us.
Some of the moves that we saw yesterday, there's a couple things that just blew my mind yesterday in terms of the magnitude of some of the moves across the semi space. Of course, the semis were, the SMH ETF was down. I think on the worst of the session, it was down about 11%. So you got to think about that too. Like, that's the average of the stocks that are in there. There were some stocks that were faring okay. I think we talked about Intel. I don't know where they finished on the day, but there was a couple of names that were somewhat buoyant there. But then there was also many stocks that were down well over 20%, 25%, a couple stocks down 30%. I mean, this was just a huge move, and it spilled over to not only the semis, of course, in tech, but it also spilled over to all those power names. Anything that basically had to do with AI that has been acting very well, like so the CEG, the VST, the GEV. I mean, those moves were just unbelievable. It also felt like there was a lot of just momentum names down too. But if you would have told me, like, okay, the semis ETF is down 10%, and you would have said, some of these other stocks down 15, 20%, like, what's the overall market doing? And when you looked at the RSP, which is the equally weighted S&P, as well as the Dow Jones, both of those finished positive for the day. So it was not just a turmoil, like the whole market selling off. It was a major rotation. And I know this is right in your wheelhouse too, Dennis, in terms of, paying attention to certain names. And we're going to talk a little bit about Apple, what was going up and the correlation. But so to answer your question, sorry, I'm going around and around with because there were so many interesting moves that happened yesterday. it was for me, like, I always hate to play defense when the market is doing what it was doing yesterday. And I was more of I was in a defense mode because I held some things like, and a couple of these names, like I had taken some profit targets, but I had a Broadcom on and I had a Taiwan Semiconductor because these names were acting pretty well. For me, it was like damage control yesterday. And that's unfortunate because I was playing Apple, because I looked at the chart and I was like, this thing has a chance to rally. So I had hit a couple trades, to the long side. I bought some SPY in the pre-market, which worked out well, but it was a lot of damage control for me because the magnitude of the moves were just way too much.
Well, this is a great teaching moment here. And let's talk about damage control, because you know what? You can have your stops wherever you want, but when you get an overnight move and a stock falls 15% overnight, I mean, what do? I mean, do you sell just in the hole? Do you say, well, this is way overdone? Is it going to bounce back? It might be through your stop. What do you do in that situation, Christian?
So I went through, I was like, I'm going to have a problem today. And I did, like, yesterday was a big down day for me. And I just went through and I said, okay, let me cut the ones that I like the least. And I'll hold a couple of the ones that I think can bounce back and will do good. But yeah, you've got, like, it's the most painful thing. And I've done this before as a trader over and over, where you're selling stuff in the hole and you feel just there. There's not a great feeling, like, in your stomach, because you know that this is not the right thing to do. But
Yeah.
it's also like you've got stops, and like the gap down didn't really give you much of a chance. Like you didn't even have a fighting chance yesterday if you were holding some of these things, because not only did they go down 15%, then they went down another 5 or 10% after that. So some of these things were down like 25%. So you just kind of have to bite the bullet. You got to have a little bit of a game plan, and then the ones that you're going to hold on to, then you got to think about adding to those names as long as you've got a nice, like, support level. So that's basically the playbook, but it distracts you too from the Apple that was a good trade.
Oh, yeah.
And many of the other names that were going up yesterday too.
When you're getting killed, and believe me, I've traded professionally for 26 years here now, full time. There are days you just come in and it's just not working out. You can have the best charts, the best, rules. And, some days it just doesn't work out. Some days the headlines hit you. You're on the wrong side of the headlines and your stocks are all gapping down. I mean, that does, the damage to you, everything, it's going to happen. So how you recover from those is how, really what defines you as a trader, because, it's all great when the market's going up and we're long stocks and, everybody's making money and it just seems like a party. But days like yesterday happened. I mean, retail was crushed yesterday. It wasn't just those AI names. It was everything that had anything to do, with the social media darlings. They were grouping them all together. Anything Momo was really getting hit hard. And the contrarian, like the value trades that had just been destroyed over the course of the last, 6 months, or even in December, the ones that were beat up the worst, those were the ones that were doing the best. Those were the ones that were bouncing. And believe it or not, here's a crazy stat for you. The S&P, Joel, this one for you too here, Joel. The S&P, the 500 stocks that were in there, 2/3 of the S&P was green yesterday. 2/3. But the S&P was down, we're talking about, 100 handles, because it was all those main names that were down, but 2/3 were green. So, I mean, just, again, to the damage control, it's going to happen. It's going to happen to the best of us. Christian is one of the best. It's going to happen. You've got to just find, how to recover from it and bounce back. And I mean, obviously there's, everybody in a perfect scenario can get out and sell. Everybody on Twitter sells the day before this happens because, they never have losses. But we know in real life that isn't the case. So I think just, keep your head up, look for the next opportunity. A lot of people get smaller when it's not going well. It's not a bad strategy, but overall, you get dinged on a headline, it happens. I've been short stocks and they've been taken over. It really sucks. But I mean, you just got to recover from it and bounce back.
One of the best things too, just because we probably don't talk about, like, psychology as much too, and, like, because obviously, just as you mentioned, it's the charts and it's technicals and so forth, but there's nothing that you could have done yesterday if you were long some names with yesterday's move the bet, like, so what I did yesterday, and like and sometimes like you're tired at the end of, like, the way that yesterday was, like, I was tired at the end of the day, but I was like, I'm going to the gym. I was like, that's the best thing to do to clear your heads psychologically, is to do some extra exercise, get away from the screens for a couple hours, because once you kind of like have a bad day, and I made some of those, I made the decisions that I needed to do yesterday, and that's not fun. And, I always talk about how I'm okay having one bad day, but I'm not going to wreck my week, and I'm not going to wreck my month, and so forth. But getting away from the screens gives you some perspective, because you have to mentally reset. You need a break, and you need to come back, and you need to be back, and you need to come back, and you want to have that edge. And sometimes if you're worn down and beaten down, the best thing that you could do is take a break, go to the gym. I know Joel goes swimming, whether it's swimming, running. I lifted weights yesterday, like, and I feel great after that, and refreshed and ready to go for today.
Yeah, I think you make a good point about not trying like to step away. And I didn't have, any major positions on overnight. So what I tried to do, because I looked at, and I said this at the end of the show, and I asked you, Dennis, I go, Dennis, where were we at from last week? And you're like, we gave back last week's gains, right? We were at last week's low. And so I looked at my sheet, and I looked at the S&P, and we were trading right about 5,600. And I said, I'm gonna buy last week's low, and I'm gonna get it, and I'm gonna walk away, and I'm gonna check on it in like 2.5, 3 hours. And you know what? Open 97.75, hit 96.75, never went to 94.50. Never went a point lower than the opening of the regular. I tried to, I was convinced we weren't going to go back down to the Globex lows. And so it was just a thing. It's like I had a firm plan, and I was so sure that I was going to get that. It takes some heat on that trade. And then I checked it, and I'm like, oh my God, it never went down there. So having a plan, executing it, because I mean, as bad as it was, I was just like, I wasn't going short. I mean, there were some things definitely
short in the hole like that.
Yeah, except and I could talk about some things I was good at, some good calls from yesterday. Totally wrong on Oracle. Totally. I mean, NVIDIA. I thought those things would get more of a bounce. Maybe we should start to talk about that, because there was some serious damage in those stocks. And and they're coming back a little bit today, but I'm going to go to this NVIDIA chart. And what I like to do on days like this, I'm focusing on this bar in NVIDIA. I'm not thinking about the gap. I'm not thinking about the 50-day moving average. I'm thinking about that price action from yesterday. If we can put a couple lows in this area, hold, get back, start to fill the cap. But if I was a long-term investor in NVIDIA, I wouldn't be happy until this thing was back over 140 and holding a bid. That's a long ways away. I know that a lot of things can happen, but man, Oracle. I mean, you can talk about a gap fill sometimes. Well, not only did it take a gap fill, it went back down to almost the low of the move.
It kept the gap. It didn't even fill the gap. It didn't touch the gap. A gap through the gap. A gap into a gap. This was Oracle is almost more shocking to me than NVIDIA, because we had the ridiculous move, which we called out on this show, when the thing went from 165 to 190, because, we had Ellison on TV with Donald Trump. And I'm like, this is a ridiculous move. And we talked about, shorting it into that at 190. Obviously, the gift from the gods, if you were short this thing, was, this, obviously DeepSeek stuff, which I don't even want to, I'm sick of hearing about DeepSeek. All it was CNBC. DeepSeek had to be mentioned 10,000 times. It's like, I cannot hear about DeepSeek anymore. I tweeted out, I'm like, I just don't even want to hear the name DeepSeek. I just don't want to hear it. Not that my stocks got killed because of it, because I do own NVIDIA. I do own some of these AI names like Dell and AMD. But it's more just, I'm just sick of hearing about it. But the Oracle was incredible. To go that far and then give the entire thing back. It goes from the high of the year to the low of the year, basically in one day. And we bounced right where you think we'd bounce, right around that 152. So support is huge at 152 for Oracle. Would I consider entering Oracle at 152? Yes, I would. I don't know, 160. I mean, there's a lot of damage here, Christian. I think some of these things could bounce a bit here, and they are this morning. But there's a lot of damage in here. There's a lot of people that are really hurt. And stocks typically don't just bounce back when there's that much technical damage. They take time. They may come back, you mentioned it. I think they do. Still own NVIDIA in the long-term portfolio. Still own Dell a little bit, but I had sold a lot of the Dell, remember, at 119. Still own AMD, fully in the AMD in the long-term portfolio. I do think that eventually some of these stocks bounce back, but it's going to take some time. I mean, Christian, how do you approach today?
I think, with the magnitude of the moves that we saw yesterday, that some of these names are going to bounce, but you have to think about who's trapped in these names who are waiting for some type of a bounce to be like, okay, I feel a little bit better about selling into this bounce versus, selling as far as down as these things went yesterday. So I think if you're playing for the bounce, like I think if you get it, you got to take advantage of it and lightening up. Now, it all depends on your time frame, right? So if you're thinking like, oh my God, I got this nice dip in NVIDIA, and you bought some yesterday or you're buying some today, whatever, then okay, like that's got to be like a long-term strategy. Because to both of your points, and by the way, Joel, that was a great call yesterday on S&P, because you were like, hey, I think that the low's in, and it was. But I think if you're being more of an active trader, then you want to basically say, hey, I got the bounce here. Let me put some of this money in my pocket. And then I can think about maybe the rest of the trade being a long-term trade. But it's very important that with your time frame and you think about what you're doing here, because I think I agree with you. I think there's so much technical damage here that, I'm looking at stuff that didn't go down as much and that didn't break. Like I'm looking at like in that space, I'm looking at like a JBL Networks, that JBL that had
Sure.
good earnings and that fell, but didn't fall that much. I'd like to see it stay above that blue line that you got, that nice new blue line.
The Christian Fromhertz blue line, CF line.
So,
well, one thing I want to mention something about NVIDIA, and we talk about this. Well, first of all, guess who's just going to be our guest on Thursday? Guess who our guest is going to be on at 8:15?
Jensen Wong?
Who's
That would
been
be great.
talking about
Jensen Wong? Is he coming on?
Someone better than Jensen Wong, who's made a great call in this. A guy that's been on the show quite a bit in the past.
Oh gosh,
He's
I
been
hate it
making-
when it's this guess.
He's been preaching about this. Wall Street veteran has his own indicators.
Oh, Mark Shakin.
Yeah.
Mark Shakin's been talking about the NVIDIA fall. I was thinking about Mark yesterday.
Yes.
He's relentlessly advertising to me on CNBC how NVIDIA is going to have this big fall. The prophet. I mean, he's like the prophet here. Mark Shakin. All right, we're going to get him on here because you know what?
Yeah.
Mark's been absolutely right.
Yeah.
I think I have that commercial down like almost word for word. Like hedge funds are selling NVIDIA
so much.
Yeah.
We got to get that other stock from him too.
Yeah.
Okay.
Yeah. But just one thing, and then if you guys want to move on, we can move on to some stuff that's moving. The overhead supply in this thing now is just monumental. And I talk about this. You have people that weren't in NVIDIA, right? And they look at yesterday and they're like, hey, I'm going to scale down. I'm going to buy, 80,000 shares. I'm just throwing numbers out here. And they average 118, 117 and a half, 17, all the way down. And they're like, I just want out at 122. That's all I do. That's all I do. This is just a trade. They don't care about yesterday's high. They don't care about the gap. They don't care about DeepSeek. They don't care about anything. They're taking a big 80,000 shares is nothing for a big institution to try a trade like that. So there it is. I mean,
I want to give you a level on NVIDIA. I want to give you, before you move on, I would say 129 to 130. So yesterday's high was 128.40.
Yes, good.
Be a wall of resistance there. And the old 130, it had bounced there multiple times between 128 and 130. We always say old support becomes new resistance. So it just technically sets up well to be a seller up at 128 to 130. At 122, you may get more of a bounce. It may just continue down. I think there's no trade here for me. But if it got to 128 to 130 and you were puking your guts out yesterday, looking at 116, it's probably the spot to lighten up. So I would say that's my level for NVIDIA. And again, we've talked this for a long time, so maybe we move on now to another stock because we're 20 minutes into the show and we basically talked one stock. So moving on, sticking with this theme though, I wanted to talk also about this, murdered Astera Labs. And, you were looking at this one too, Christian. ALAB was a stock that was $147 15 trading days ago. It basically has almost had a 2-for-1 stock split now. This thing has been absolutely killed. Down 2 months of gains, just gone just like that. It is getting an upgrade here today. So we have an analyst stepping out, jumping in, Northland, upgrading A-Lab. They are buying the dip to outperform, putting the 120 price target on, which, funny, the stock was there yesterday or 2 days ago on Friday. They're saying it can get back there. They said the stock is overdone. A-Lab shares declined 38% since our downgrade. Great call, the downgrade, by the way. It's Northland's all over it. So they're ringing the register on the downgrade. Now they're re-upgrading it. So, I mean, they're buying the dip. There's some people buying the dip here. Christian, are you buying the dip in this one?
No, I've traded this one too. Like I traded this one on the way up. Like this was a very good name for me. But once you start to break down there, and I think that you've got on the top right there that break of like I guess that is the 50-day moving average there in A-Lab. But once that happens, it's kind of like it's game over for these names that have been momentum, and we've used that term a lot, but this was a momentum name. So once the momentum breaks, you have to respect that, and you cannot fall in love with these things. You can fall in love with it as long as it's above that 20-day or 50-day moving average, but once it breaks that, you got to break up with the stock. And that's if you're playing that game like I do with momentum names, and I'm there to try to milk the most money out of these things when they are trending up like this. But you have got to be aware when these things begin to break, because they will change personalities, and they will not. The personality in the stock will change so quickly that you've got to get out of the way, as it's changing and as it's beginning to break those short-term moving averages.
Great point. And I mean, that's all about what trading is, not getting married to any individual stock. It's going your way, trending higher. You're Jeff Mackey, Purple Crayon. Jeff, we got to get you on the show. I'm going to reach out. My other friend Jeff wants Jeff Mackey on the show. I know, Jeff, we could get him on the show. We got to get Jeff, but I always talk about the Jeff Mackey Purple Crayon going straight up, usually moving average, whatever you want. But October to November to December, that was straight up perfectly. It started, though, pausing and obviously not making a new high in early December. And we also talked about this 2025, leaders to laggards, laggards to leaders. This was a calendar turn thing for Astera Labs, really. I mean, it started showing weakness after the calendar turn. Why do you see this happen? The mechanics behind it are the simple reason is that somebody is long the stock in December and up 100, 200% is probably going to hold off selling it until 2025 so they don't have to pay the tax bill for another year. That's why we talk about seasonality and the calendar effects, January effect, where leaders actually become laggards because they're prone to profit taking. People are like, okay, we're 2025. Now I don't have to pay the IRS till 2026. I'm going to book these profits January 2 and January 3. And that's exactly what happened in Astera Labs and exactly what happened in a lot of other momentum names as well. So just keep that in mind. When you're trading, you've got to be aware of seasonality as well. And if you're buying Astera Labs, on 2025 saying it's going to be another year, you usually have a little weakness. Now, obviously, we didn't see this deep seek, I said it again, headlines coming, but, it did come, and, but its stock was already weak going into this headline.
Can you just go, before we go to Meta, which is a great stock to go to next to, because someone asked in the chat, hey, why is Meta going up, or why was it going up yesterday? I just want to go, can you just go back to that A-Lab chart one more time? Because what's important, because what I do watch is when a name breaks that blue line, I do watch to see if it could retake it, because sometimes you do see false breaks and then you see the stock retake it. Notice that it tried to retake it there,
Friday.
And then it failed, so it's crucial that those names, because they could rally up, but it is, if you're playing some of these things to the short side, if it bounces up and it can't retake that level, that's the bounce, and that's your bounce that you want to sell into if you got stuck in the name. So
that's a bull call. That's a bull call you said Northland. That's a bull call.
Big time bold call.
Yeah, because I'm looking at a couple. The first thing I would look at, look how far we are from yesterday's high. I mean, how about the people that are like, oh, I'm going to scoop this thing up in the open and wait for a gap fill. You are $15, $14 from yesterday's high. And then for a 50% retracement, I'll tell you how I'll look at this one technically. The longer it takes to get back into this gap area, because I think we're going to have lower highs and lower highs and lower highs, there's more of a chance this thing, I mean, could go sub $70. I mean, that's where the move started from. So just so far from yesterday's high, 50% retracement is even below the 50-day moving average at 113.5. So bull call on that one, but still got a gap to fill in this thing down to 72.50. I can get interested in this thing at 70.75. I'm not. After one day like that, I couldn't just hop out and buy this thing. Oh, go. Well, what do you say the target? Oh, the target was what it was 3 days ago.
But they did a good job, though, and Brent wants to come in here with something, but they did a good job because they downgraded it, and then they've upgraded it. I like contrarian calls. I don't like the analysts to just jump on the bandwagon, and, it's been upgraded, so we're going to upgrade it too, and the stock's going up, so we're going to upgrade it. So I'll give we don't know. It's a bold call, meaning they're going for it. I mean, there's not a lot of analysts upgrading stocks that are going straight down. So, I mean, it's a bold call, but Brent, what were you going to say? You were going to jump in here and say something.
Just a couple good questions from a couple users in the chat. Barat and E. Blair asking what the lines on the charts are. They're asking if that's the 9-day simple moving average or the EMA.
Joel, you put the line on the
50.
chart. What's the line on the chart?
50-day moving average.
Can you pull up your chart real quick, Joel, and just show it?
Yeah.
If you don't mind.
Yep.
I got it back up there for you.
Okay.
Joel,
Thank you.
Yep.
Okay, sweet. So just wanted to clarify that is the 50-day SMA?
Yeah, 50-day moving average.
Yep.
I got you. Cool.
Maybe it's not. No, that's a 9-day. I changed.
Oh, it's a 9-day.
Yeah, it is.
Go.
It is. All right.
We never use moving averages on this show ever. For 10 years we've done the show. We never were a fan of moving averages because they always lagging indicator. But CF is a fan of them, and you know what? He's talked us into it. So I still don't have the moving averages on my own charts, but
here,
I just
now it's 50.
But
look at this. Am I a trade station?
You put the 50 on now?
Let's see what it looks like, Joel.
Yeah.
All right. Cool. Thanks for the good question there.
I like the 9-day better. That thing's too smooth.
Geez. Oh no!
Add another one.
I do like
another
the
3 chart versus 4. Is this going to be another?
Boo.
Is this going to be another
9-day
3 chart versus 4 chart thing, Dennis? Are we going to go on about this for like 2 years? 3 days versus 4. 3 charts versus 4 charts.
That sucker's
I'm not
going
to put up with it, and I'm going to save this.
Too smooth.
All right,
I don't like any line that's too smooth. I don't trust those smooth lines.
Let's talk meta next because I want to talk about too where I think people started to realize very quickly, and this is something that I tweeted out yesterday. Like, okay, forget about the deep seek thing, but ultimately, like, if there's going to be other companies that are coming out with cheaper AI models, that means many companies that are very embedded in AI and bringing AI to their customers, they can now get this potentially for cheaper if there's going to be more entrants. And that's always been a risk, I think, of NVIDIA, is that someone comes in and like there's a bullseye on their back. So, if it's possible that whether it's DeepSeek or somebody else who comes out and says that they can do these things cheaper, look at what Meta did. Look at what also a lot of software names did yesterday who are using AI. Very, very strong. And you've now got the run up into earnings going on in Meta. I mean, they just announced the other day that they're going to be spending all this money. Maybe they can get what they need done for a little bit cheaper. Do you guys agree that there's the semis who are doing the supply were a negative, but the users and people who are giving AI to their customers, it's a pretty good positive.
There were multiple mega cap stocks that they're all trading red yesterday. And there was obviously NVIDIA, which was ground zero. But there were other ones that we talked about on this show that probably weren't going to, they fundamentally weren't getting hit as bad from DeepSeek. Meta was definitely one, opened near the lows, bounced. We talked Amazon and we talked Apple. Those were, Apple and Amazon, as I mentioned. I don't think I mentioned Meta, but it fits the same description. It's just, not getting, it's obviously not getting attacked from DeepSeek. nearly as much. So they were selling them all, baby out with the bathwater. I mean, Amazon bounced nicely, closed right near an all-time high. Meta obviously bounced nicely, closed at an all-time high. Apple had a ridiculous bounce. I mean, we talked about that in pre-market, saying this 219 to 220 has been great support. We've seen the negative correlation between Apple and between NVIDIA as of late. So it wasn't surprising that Apple turned around and went green here too. So I do think, the Meta bounce here, where they were selling everything yesterday and saying, oh my gosh, DeepSeek, Silicon Valley, it's over. No, that was just overdone in itself. I don't know, like, to bounce it back if I'm chasing Meta here now, but wow, you got to be really impressed with the bounce back that Meta had yesterday, Christian.
I was just going to interrupt. We just have some data on the tape. It's 8:30. Let me just bring up the economics. I just threw that in the main
durable
chat
goods.
there. Yeah, durable goods coming out. That's a big number down, minus 2.2%. There's got to be something wrong with that number. I don't know, but it's negative 2.2 versus a plus 0.6. And then durable goods X transportation was right on the screws, 0.3 versus 0.3. So there must be some type of outlier in that data. Because X transportation, I guess transportation maybe because of, I don't know what we had that would throw that number off. Capital goods, non-defense, XAir 0.5 versus 0.3, and capital goods ship non-defense 0.6 versus 0.2.
TLT is always most affected by the economic data. It's the first thing I look when you get the economic numbers is what is the TLT doing here? Leaking a little bit. Not a serious leak. It was a huge bounce back day for TLT yesterday. That was because main thing is defensive. I mean, people go in to safety when they're flying out of NVIDIA to the tune of $600 billion market cap fall. That money's going somewhere. It went into the bonds. So TLT had its best day in a long time yesterday, bouncing back. A little bit of, pocket of weakness here. I don't think this durable goods is going to just give it all back here, though. But I mean, at a certain point, we've got to talk about the bonds here, too. Is NVIDIA's weakness and the weakness in the Momo trade potentially the bond market's gain here, Christian? Because we know the bonds really been hit hard. I mean, again, a lot of this December sell-off was to do with why in the hell am I going to go in a 3, 4, 5% bond when I could pick up 10% in a month in NVIDIA? I mean, now that, that trade's broken, do people get a little bit more conservative with their investing? Does the bond market start to perk up?
It's a great question, and I know we've got Helene coming on in a couple of minutes, and she's got a couple great charts that she's looking at in TLT. So, yes, there was a little bit of a flight to safety yesterday. It kind of moved down a little bit. We have another bond auction today too, so I mean we've got more supply coming on. But I'm going to leave that question to Helene, who's going to come on.
You know what? Why don't we go to her right now?
She here? Bring her in.
She's here. Yeah, she's backstage here. So I will bring her on. Let me roll the intro. All right, Helene Meisler.
I love that intro. I love it.
Contributor.
We'll get you on there too. While we do it, I'll have Josh in the background get you on there too, so you can be part of it.
I just love it. It's got catchy tune. It's good.
All right, she's a contributor at the Street Pro, and I do pre-interviews with people right before they come on to make sure that they, the StreamYard and stuff. And so sometimes I automatically know if someone's going to be a great guest. Okay?
No pressure.
Okay. And so you guys, Christian may get this, you guys won't, but she's looking super fancy today. She was wearing a Keeneland t-shirt. Okay? Do you know Keeneland?
No, I don't.
They run one of the Derby preps.
Oh my gosh.
The Bluegrass Stakes. The Bluegrass Stakes is where they run it. So I went into it and we talked about the ponies. She stumped me on a question about a horse that ran at Gulfstream in the 6th race yesterday or 2 days ago. That was NVIDIA. She said it didn't do very well. But enough with my jabber here. I'm gonna pop off here and I'm gonna let Christian take it away. Triple D, you can stay on with her too.
I'm here with her.
Well, first of all, I think we do need a horse indicator. Like, I don't know how many company names, that horses have that horses have been named after, and I don't know if that's the top. Like, I don't know what if that's a contrarian indicator. When you name your horse after a company, there's got to be some type of stats on something like that about what the company does a year later. But anyway, I thought
let me just interrupt. The Baupost, who's the owner? Seth Klarman.
Yes. Yep.
He's a big horse guy. He owns a
yeah.
lot of horses, and he names his horses very funny market names. But one of his horses, Cloud Computing, won the Preakness, I don't know how many years ago, but I always think that his horse names are funny. So when I saw NVIDIA, I said, oh, it must be a Klarman horse.
Yeah.
It wasn't.
Wow. Yeah. Yeah, he's great. I actually met him up in Saratoga. Really nice guy. But Helene, it's a great pleasure to have you on, because I think you're one of the best follows out there in social media. One of the things that I love about your analysis is you're very objective, and I could always go and look to see what kind of data that you're putting out there, because it will give you really good perspective. If you don't mind, could you give just the listeners a quick background? Because I know that you have an extensive background other than RealMoney now. Can you just give a quick minute about how you started in the business and your history of where you got to where you are now?
Well, I went to work on Wall Street in 1982, so I'm old. And my timing was actually perfect, because it was the beginning of the bull market after having been in a bear market for 10 years or something like that. And I started at Cowen in the late 80s. I went to work at Goldman Sachs on their trading desk. I was their first market technician they'd ever had. And that was kind of an interesting experience. And then in the early 90s, I went to work at Cargill in their equity division, and I managed some money for them. And then I met my husband in Minneapolis, and he got transferred to Singapore. So off we went to Singapore, and I quit my job. And Jim Cramer, who I'd known back in the 80s, was starting The Street. And he asked me if I wanted to write, as he put it, one day a week just to keep my hand in it. And I thought, oh, this will be kind of fun. And here I am, 20 some odd years, 25 years later, still doing it.
And you still also, I see in the background, you've got some charts back there that you are still charting by hand.
Yes.
Can you explain that a little bit? Considering obviously there's you don't need to do that anymore, but you still do this.
Okay. So when I went to work on Wall Street, we didn't have computers on every desk. We had quotrons, which could basically give you a quote, and that was it. We didn't even have news recall. And we used to chart by hand, as you see, up on the wall. And my first day of doing it, I will tell you, I said to my mentor, Justin Mamus, I said, Justin, this is ridiculous. There has to be a way to computerize this so you could sit at the desk and we could just go through the charts. I thought, brilliant. He said, no, there was a certain feeling you got from putting the pencil to the paper and even from sharpening the pencil. Fast forward a number of years later, there were chart machines on every desk. So there you have it. And we moved to Singapore in 1996. And I said, okay, I'm going to give up charting. I can get it on the internet, which was only dial-up back then. And after a month, I felt like I didn't know what was going on in the market. And I went back and I started doing my charts all over again. And all these years later, I'm still doing the charts by hand.
And how many charts right now are you, how many charts are you still charting by hand right now?
No, I should count, but I would say 150 to 200.
Wow.
And what makes you add? Do some of them drop off, or just do you add? What begins like the process of like, hey, I'm going to start a new chart?
Okay. Well, first of all, they go away when they get bought out, or they go under $5. Because those under $5, they're logarithmic charts. So under $5, a 25-cent move is like huge. It's just my pencil just wears out the lead. And then obviously if they get bought out, I put them away. Or like, excuse me, in the case of NVIDIA last June, when it split 10 for 1, it's a bit complicated here, but unless it's a derivative of 8 or 80, really. So it has to be 8-to-1 works, 4-to-1 works, 2-to-1 works. I could just keep doing the chart. But if I go off kilter, like I think it was Tesla maybe, or Apple did a 7-for-1, I have to start the whole chart all over again.
Oh,
and so
yeah, you can't adjust those red charts. You got to go all the way back. That's a lot of work. You hate 2-for-1 splits.
I absolutely can't stand it. I'm like, could they please consult me when they decide? And 3-for-2 is also terrible.
All right, let's
point and figure, or bar charts.
Oh, they're bar charts. Let me see if I they're.
Oh yeah, we want to see these.
Let me see if I can get one up close. I don't know if you can. Can you see them?
Yep.
Beautiful.
Yeah, nice.
Holy, good penmanship too. Love it.
Is there an indicator that I've joked about this too when I see you on Twitter or X and you talk about how a name has gone off the top of the chart, meaning you need to put a new piece of paper.
Right.
Is that ultimately like a contrarian signal?
No, that is not. But I will tell you. I will tell you what is. So the charts are logarithmic. So let's say your center scale is 20, because the chart is trading around $20. You start it there. The top scale is 40. The bottom scale is 10. So in other words, for it to go off the top from 20, it has to double. So it's a lot.
Yep.
And even if it's an $80 stock, it has to go over 160 for it to go off the top. That's not a big deal. But let's say it's an $80 stock. It starts out as an $80 stock, and it starts trading up near 160. Here's the kiss of death. If I decide to cut and paste in anticipation that it's going to go off the top.
Yes.
Then it is the absolute kiss of death. You can be guaranteed that chart is not going over 160. And if it does, it's going to be false.
It's the golden rule of technical analysis. Sell the top of the page and buy the bottom of the page. Because I used to do the charts by hand. What was that magazine that used
Daily Graphs?
It was at the Merc. I used to go and get one, and then get the pencil, and then come home after the market's closed and everything. But I'm gonna be quiet again. I'm gonna go off stage. Yep. I'm gonna let Christian take.
Okay, so let's fast forward a little bit. I mean, this is great background, by the way. So this is not a hand-drawn chart, but this is So some of the things that you look in your analysis, and by the way, Helene Meisler, great in terms of what she provides on the weekend. She provides a whole, you call what, chart fest, right? Where you go through a series of charts and talk about what's going on here. This is TLT, which we were just talking about, which had a nice move yesterday. Can you give us your interpretation of what's could be happening here in TLT?
Right. I'm not positive that this is going to be a good bottom. So the first thing I notice when I look at TLT or bonds in general is that interest rates have been fluctuating in a wide range since almost 3 years now, 2.5 years. And then when you look, you can notice it's almost a textbook head and shoulders bottom. Almost, I say. It's possible. I don't know. For now, I just think you're trading the range, but it is possible.
So we've heard all this about, like, especially, like, it's funny how the media will pick up on things, and people were going like berserk about, hey, rates are going higher. And I started to kind of zoom out and looked at this. I was like, well, wait a minute. We haven't even taken out the lows in TLT from last year or the year before. So I'm like, let's not go crazy about this until we're actually picking up momentum. Do you ever look at this and you say, hey, what's the ramifications? Like, if TLT does this or does this, are you essentially looking at like another group of stocks? Do you favor, or are you just basically saying, hey, bonds are going higher?
No, I look at several things, but before that, let's go back to the weekly chart. Okay. So what would make me believe that this will break and rates will go much higher than we are now is, you see how we've had that little rally off that low. And if you fail before you take out that high up there, and let's say you turn lower and this is a lower high. So then you have that high up there in, I can't even see the dates, in the summer, and then you have that high there in the fall. And now if you make a lower high, the chances of breaking that lower line go up significantly. And then it's like, think of it like a broad jump, okay? If this becomes a pullback and then it becomes like a running broad jump to break that line, you have a lot more momentum breaking that line.
Gotcha. And you bring up a good point. We're still in the pattern right now of a lower high. It's nice that we found support.
Right.
But we haven't done anything yet. So that's why you said it could be like, and this is why you draw the lines and you pay attention to where your support and resistance are. And I noticed that you do that with a lot of your charts, and you will basically say, okay, this is like a logical place for us to kind of for price to come into and settle in. And another question for you, as I was going through like your weekend chart fest, you were talking about how many names or groups are basically just in a range.
It's just amazing. I mean, even the S&P, think about the S&P. Since November, it's been, what, 5,800 to 6,100. That is, you would kill yourself if you were watching a stock that was trading 58.61 for months. You'd be like, oh God, I can't do this anymore.
Yeah.
And you just, so some of the ranges are a lot wider and some are quite narrow, but it's everywhere. You just have so few breakouts on the downside or the upside.
Right. And so if you, Joel, if you could go to the screen with the stocks with the semis on it, and we'll go back to the internals. But here's a good example. Like, just when you think this is starting to break higher, starting to make that turn, like how many folks got really messed up on that because it started to kind of move up there, and then you see them move back, and I think that was on Friday, and you would call that what, a failure, or is there a technical term?
You know, I guess it's a failure, a false breakout, but everyone makes fun of me because I draw such thick lines. But the charts I do are John McGee charts from the Edwards and McGee book. And McGee always said that for it to be a real breakout, it should be 3% or more. And
so that thick line's a 3% line right there. There's a reason for the thick line.
Close enough. You know,
like
instead of my having to take out the calculator and do the math, I just draw a really thick line.
I like that.
And so my view is that if I can see, I have bad eyes, if I can see the breakout from across the room, it's good. If I have to squint and get real close, I'm like, maybe not.
So now in this chart, this is like a ping pong ball. We're now back to the support, and this is a support level that could hold, and we could kind of meander around this. But is this a chart that you like? Tell me a couple of charts that you instead of something that's moving range, or is this something that you think that the market right now, considering that there's so many of these charts that are doing this, do you potentially are you in a market right now where you're just thinking, hey, we've got a support level to trade off of, that's a good trade? Or are you are you looking for things that are doing something different? Because there's a lot of charts that are doing this, maybe not as dramatic, but they're trading in the range.
So, if we go back to that TLT chart and we remember that we bounced off that low, I'm looking at the same sort of thing. So you get a bounce off the low, but if you get a terrible little dinky bounce and then it turns south, you've had a running start to break the line. So what you do is you start out playing the bounce because you kind of know where you're wrong, but you have to be aware that the bounce, if it's pathetic and it turns south again, is likely going to break and come down to that blue line. So then you'd switch tacks. You go from long to short.
Gotcha. Okay. So that's a great point. It's like, okay, you've picked your spot. Now you've got your entry. Now let's kind of observe, and if there's power on the move off the support, or if it's really like kind of lethargic and it goes up a little bit but starts to give it back.
Right. You have to see what kind of I don't think there was an awful lot of panic yesterday. I know everybody thinks there was, but NVIDIA had high volume, but it had higher volume a year ago. So I don't know. I'm betwixt and between there because I don't really feel like there was. I mean, hell, Texas Instruments was up on the day, so it's not like there was a wholesale selling of semis yesterday.
And what are some of the internals or indicators that you look to see if it's a panic day or if it's extreme?
Well, a high volume day. So, for example, if yesterday had the NASDAQ had seen like 90% of the volume on the downside, I would have said, oh, we had a good panic day. But it was 63%. You know, people sold. That's what it looked like.
And the equity put call ratios, I know something that you look to for just like for extremes or see if there's fear in there as well.
Right. And yesterday was 58 or 59%.
Nothing.
Again, you know, a couple of weeks ago, right before we got that low, in mid-January, it was like 90 or 94%. People were scared 2 weeks ago. Now, they're not really. And I even just saw a statistic this morning that there was inflows. I can't remember what the number was, maybe 3 billion or something like that, into the Sachs yesterday. Does that sound like panic?
No. I was just going to show this one screen too, if I can. Let me see. Window. Yeah, here. So here's what Helene is referring to. The equity put call ratio in the middle of January, and this is where we got the nice bounce off of. There was like sentiment, and I know this is not just. There's many other sentiment indicators. I know that you look at the surveys too. That got extreme bearishness a little bit. But when these things, when you see something like this, where a spike, where all of a sudden, and it doesn't mean necessarily put buying, but it's put activity, and it has just been a good indicator. But yeah, you could look at yesterday's and we moved up to 0.57. So let's go back to, I think Joel's got your chart of the overbought, oversold indicator. What was this flashing yesterday?
Well, not yesterday, but this is going to be a little in the weeds here. I use a 10-day moving average of net breadth to decide if we're overbought and oversold. So first of all, start there back in December. You see that low in December?
Yes.
That was as oversold as we've been in a long time.
What is this on?
What is it on?
I can't see because I have bad eyes too, Helene. So we're overbought, oversold on which index?
It's just on breadth, New York Stock Exchange.
Overall breadth, New York. Okay, overall
so
breadth.
You can get this on stock charts, and it's $NYAD.
Okay.
And then you just do a 10-day moving average of it.
Yep.
And so that low in December was the day everybody decided that the world had changed because it was the Fed meeting. Okay. And remember how bearish everyone got after that Fed meeting? I think it was December 18th. We were already heading down. The majority of stocks had been heading down, quite frankly, since October.
Yeah.
And that was an oversold condition. If you go back and you look at a lot of your charts that are not the mega cap, or what I call the index movers, if you go back, you're going to see how many stocks made their lows on the Fed day. And that was because they got so oversold. So when you go forward to that mid-January low, look at that higher low in momentum. Do you see that?
Yes.
That's a higher low, and that tells you that the selling was already drying up in mid-January, despite that high put call ratio and us getting so oversold. And then we had a lot of other sentiment indicators that got too bearish. But now we have our first higher high in this indicator since October. Okay, you see how we're higher than we were in November? So that's a positive for what I would call the 493.
Gotcha.
And that's because momentum has picked up. But now we're overbought, so we should go into some kind of a chop to down mode till we move this back towards an oversold condition. But overall, this should be a positive over the next several weeks.
Okay.
I got one more thing for Helene before we let you go here. And I want to know, and Joel, this would be for you too if you want to pop on here. Do you remember these quote books?
I have to.
This is from
I do not.
This is from 1971. It came from my neighbor Sarah. This is before But again, you're too young for this one. But do you remember these quotes? This one's 1974. These came out in the 70s and the 80s.
No,
These
I've
came out in the
never
70s
seen
and the
those.
80s. And these were my neighbors said these were the holy grail. So these were the holy grail where you got these once a week and all these charts because there was no computers back then, but they sent these in. And he says, I waited every Saturday to get the weekly charts to come in here or there. My neighbor
I got daily graphs on Saturdays delivered to my house.
Oh, you did? Okay.
Yeah.
Through the
So that's
70s and the
dating back
80s.
to the 80s, yeah.
Yeah, in the 70s and the 80s.
Just one final point, and then we'll wrap up. And thank you so much, Helene, for coming on. And we want to know where to find you too. And but those divergences are so important when you're watching the price action, and when you see something in the internals like that change, and it hasn't shown up yet in the price. So they're very important to look at. And I love your studies on internals. It's one of the many reasons why I follow you. So your Twitter changed, your handle changed because what happened? You got hacked or something.
I got hacked sometime in November. I think it was Thanksgiving. You can find me on Twitter. It's ChartFest1. You can find me on Blue Sky under my real name, H. Meisler, Meisler. And every Saturday I do a Chart Fest on Substack, where I think I'm H. Meisler. I may be Helene Meisler. I don't know. But I do tweet it out and Blue Sky it out or whatever it's called.
Awesome.
All right, we got to get you back on for your Derby pick.
Then you want to take something else, not my pick.
All right, Helene Meisler,
awesome.
contributor over at the Street. Fantastic interview. We're going to be dialing you up again real soon. Thank you very much.
All right, thanks a lot, guys.
Thanks.
Love the hand-drawn charts. That is just so cool. But I mean, we're so spoiled in this day and age where you just type in your ticker and it pops up on your charts and sets all your indicators and that. I mean, it wasn't that easy. Back at Joel's day, they were joking. Joel had to use cave paintings to do his back in the day. So, anyways,
she said at Charts Fest 1, right?
There is I just went and looked her up on Twitter. There's 20 fake ones. So you got to make sure you got the right one. You made it big when you got 20 handles that are fake behind you. So make sure you get the right one. We showed it on the screen earlier, I believe. I believe Brettster put it up there. So, yeah. So, okay. Couple more stocks. Just, news. It is, we have run from the Motor City for a long time here. We need to cover General Motors here or the locals will riot. GM trading down here in the pre-market on their earnings. General Motors did report earnings here this morning. It was a while ago, 6:30 this morning. They reported $1.92 versus $1.86. Sales estimates for $47.7 billion versus $43.6 billion. And they see EPS. Man, you want to talk about value trades. $11 to $12. Analyst estimates for $10.84 in 2025. So they actually raised guidance. They don't care. The market just doesn't like the story of General Motors.
Nope.
And the thing's trading at a PE of what? If it makes $12, it's trading at a PE of 5? Is that right? 5? I mean, this is a value trade, but again, we know the market just does not like the big three. They just don't like General Motors, Ford, even though they make a lot of money.
This is it had the big move and then the break. I just got to get over $55. We talk about 50% retracements. Nearly got that yesterday. So really, in order to go back and feel comfortable about going back over 60 here, you did spike. Dennis, did you get any of that? You got to spike to 57.59.
That's the algos. They see beat raise, they automatically buy. Beat raise, they automatically buy. Again, GM, Nucor is another one we could cover the same thing. Beat and raise, Nucor, give it back though, because you know what? It's just not the story that this market is still interested in. They're interested, obviously, the value trade has picked up a little bit and perked up a little bit, but you can still see there's just not follow through. There's not the sexiness. The people on social media, the younger generation, are not going and buying the Nucors and the General Motors, which gives us more reason to think that eventually those AI stocks do rebound for the simple reason there's just so many participants that just aren't interested in these names, even though they make a hell of a lot of money.
All right, you want to do, did Boeing report too?
Boeing reported, but they had pre-announced. So we already knew the numbers for Boeing. So that's why if you're wondering why Boeing isn't moving a lot, Boeing pre-announced
Ooh.
last week, so we already knew the Boeing numbers, but they did officially announce. It's just down slightly here. If there's one stock you want to cover here too, RCL would be interesting because we know the cruise lines have been firing on. You don't have do you have cylinders and ships? I don't know, like maybe, but they're firing. They're firing on all cylinders. We'll just say it anyways. I guess they do. So RCL trading up $10 here. I'll give you the earnings report, and then we'll let Christian and Joel break down the technicals here. But RCL reported earnings at 6:30 this morning again. Adjusted earnings $1.63 versus $1.50, 3.76 billion. Slightly light on the revenue, but this is a story that is loved. The guidance was in line, 1435, 1465, 1441. So right in there, kind of in line. But again, stock is loved. The cruise lines have really been going here. Stocks are definitely trending higher. What are your guys' thoughts? We'll throw it to Christian first.
Yeah, I think a lot of semiconductor investors booked their cruises yesterday to get away. Sorry, bad joke.
Or maybe they canceled them to save some money.
Yeah, that's a better point. I mean, the whole group has been strong. I'm also I'm watching for this, see if this lines up with Joel's level, but I'm watching 249.50 would be a short-term level to watch to see if it could break higher. Also, I don't know why Viking Cruise is down, and I don't see any news on them. I guess if anybody sees why Viking is down pre-market, I'm not sure, but
I think that's just sympathy. Well, actually, no, it wouldn't be sympathy because RCL's down. Let's go look at Viking.
Wow, that Viking, that that spiked to $43 right on the kisser. I don't know.
Okay,
just
something happened with
two
Viking.
things. One, Tracy Raniak on yesterday talking about the cruise lines. So congratulations, Tracy. Is a good call. And 4 highs in the same area, right around that 249, 250. Boy, I'd say I mean, 4 highs in the same area. That's good resistance to me as well.
Oh, RCL. Here's why RCL is up. So if you dig down, I was just looking at the Royal Caribbean report, digging down into it a little bit deeper. They are intending to move into premium river cruises. So basically coming into a little bit of, Royal Caribbean instead has ordered 10 ships as part of a planned offering for Celebrity River Cruises, tapping into a market popularized by Viking Cruises. So Royal Caribbean coming and attacking the Viking market a little bit directly here. So that is why 10 ships are coming into their stomping ground. You got to dig deep sometimes for these things. I had to dig deep for that one, but I did get it. VIK down because Royal Caribbean announcing that they might be coming into their market a little bit.
Wow. Excellent analysis there, Triple D.
Digging there. That was a dig.
That was a dig. That was
okay.
A dig.
So earnings tonight, there's not that much. We got Starbucks is probably the highlight, Logitech also as well. But then comes Wednesday and Thursday. And Wednesday and Thursday is the nights. We have 5 of the Magnificent 7 reporting within 24 hours. Tesla, Microsoft, Meta, Apple, Amazon. So Wednesday, Tesla, Microsoft, Meta. Thursday, Apple and Amazon. And then you have a lot of other ones like Qualcomm and Intel, the Caterpillar if you want to get away from tech, ServiceNow. So many big names coming. So calm before the earnings storm here. It's going to be earnings that drive the bus. So we can do our technicals all we want on all these stocks, but we know technicals take a back seat when we have fundamental news coming out. And you're going to get a lot of fundamental news coming from the big 5.
I'm also watching. I know you're dead on about today. Not that many companies. Just for sometimes I like to watch one name that is like a leader within a group to see how the group is going to do. Software did very well yesterday. There's a company called SAP, which has been like the leader. If you can bring up that chart really quick,
yes, sir.
But this is going to be interesting to see because they're up a lot. And I think it'll be interesting to see because they have the possibility to move that software group, even though you may not be
I think they reported, Christian. I think they reported this morning.
Oh, they did?
Yeah, I think they just reported. I think it just happened. Let me get the numbers here. I'm pretty sure SAP reported this morning. So it's trading down $6. They actually reported here, well, middle of the night because European. So they reported this morning, middle of the night. $1.49 versus $1.40. So they actually are trading down just slightly here. It's had a big run. And remember, because it trades as an ADR, it's already trading overseas. So it's already kind of pricing in where it wants to be.
That looks like a pretty good report to me. $1.49 versus $1.40.
Maybe bar?
Yeah,
Could
10
be that
billion
it's
versus
like
9 billion. I can't
price thing.
interpret the maybe
euros?
yeah, I can't. What is it? Maybe the guidance was a little weak though, but Depp made a
I
currently
think bar
trading
just
now.
a little bit high here too. This stock didn't sell off at all yesterday either when the market was selling off on some of the other tech names. So what were you going to say, Christian, before I cut you off?
Just that it ran so much into the report that even though it
Yeah.
had a good report, it's kind of a little bit exhausted there to the upside.
Yeah. Okay, and then other ones that reported this morning were like Lockheed Martin's down $20. I mean, that's a big move for that stock here. So we didn't get to them all here today, but we had a fantastic. Gasoline was excellent. I still can't believe she hand draws all those charts there still. Again, thanks for everyone here. Christian, Brentster in the background working hard, finding and obviously, posting stuff and finding us news as well here. So we're still working. We're working.
We're working. We got some exciting things to bring you in February. Tomorrow's our guest, Wedbush Wednesday, Moshe Katri, and he's in the fintech space, IT services, the trends and themes that are going on that. So he'll be our guest tomorrow at 8:35. So far, it's a turnaround Tuesday. Let's stay green. All your stocks you're watching, make sure they stay in the green here. So
Remember the
that's it.
negative correlation between NVIDIA and Apple here too. Apple is trading higher in the pre-market. It's kind of opposite. It's not up much though. Just keep an eye on that because if NVIDIA continues to show strength, Apple may actually roll over. If NVIDIA continues or rolls over itself, then Apple rally continues. That negative correlation was on display big time yesterday. It still exists. It did not go away.
Okay, that's it for today, folks. See you tomorrow morning.